Hey everyone, welcome back. Today we've got news on the yen treasuries and more. Let's get started.
Let's kick off with the yen. It's at its weakest in almost 16 years against the British pound. The yen dropped 0.1%, hitting 200.63 per pound.
Traders are betting on a stronger pound. They think UK interest rates will stay higher than other G10 countries. The Bank of England might be slower to cut rates.
Carry traders are diving into currencies like the pound for better returns. The yen, with the lowest interest rate globally, has tumbled against all its developed economy peers.
Japanese authorities have intervened twice since April to support the yen, but it's still sliding.
Now, onto treasuries. They took a hit after the US sold $70 billion of 5-year notes at 4.553%. That's higher than the expected 4.540%.
An earlier $69 billion in 2-year notes also fell short. Consumer confidence rose unexpectedly in May, but recession fears grew. The US 10-year yield jumped 8 basis points to 4.54%.
Starting Wednesday, the Treasury will begin buybacks of older, harder-to-trade debt. This is the first time since the early 2000s.
Also, the Fed will start tapering its balance sheet unwind in June. The S&P 500 remained mostly unchanged.
Over in China, investors are flocking to ETFs tracking Chinese stocks. China saw the largest inflows among emerging markets, totaling $610.3 million.
New government measures are boosting market confidence. The iShares MSCI Emerging Markets ETF saw $1.07 billion in inflows last week.
These steps aim to rescue China's property sector and support its economy. Investors are repositioning portfolios to add Chinese assets.
These steps aim to rescue China's property sector and support its economy. Investors are repositioning portfolios to add Chinese assets.
There are concerns about issues like international investors sourcing dollars on time and global funds moving at different speeds.
In U.S. stock news, new rules now settle share trades in 1 day, cutting transaction time in half. Big tests are coming with T+1 and MSCI's index rebalancing.
Beijing will host an IMF briefing. Former Thai PM Thaksin Shinawatra faces a royal insult case decision, and it's the deadline for BHP's Anglo-American bid.
Coming up, Australia's inflation reading for April is expected to show a slight slowdown. Data on construction work will start trickling in ahead of next week's GDP release.
Lastly, Minneapolis Fed President Neil Kashkari's hawkish comments moved markets. He said more rate hikes aren't ruled out and the Fed can stay on hold indefinitely.
Here's what caught our eye: Taiwan curbing presidential powers, updates on Saudi crown prince, Toyota investor votes, Chicago crime impacts, Hong Kong arrests, India's heat wave, UK election polls, and vacation tips.
But history might not repeat. A higher neutral rate could mean the economy handles high rates longer. Cash carry indicated only 2 cuts for 2024.
This would be unprecedented and risky for stocks. Even if cuts come later this year, it's uncharted territory for the Fed to hold rates steady for so long after hiking.
That's all for today. Thanks for watching. Like, subscribe, and hit the bell for more updates.
The closest parallel is the 1990s with a soft landing and steady rates. But with many economic concerns, no one knows how this cycle will turn out. See you next time.